Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 17th of October 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's kick off as ever with a look at the overnight changes and price moves to be aware of. And the dollar's been pushing back, making gains against both the euro and the pound sterling, as you can see here, and also against near neighbours Canada and the Mexican peso. 0.21% against the Canadian dollar and gains of 0.16% against the Mexican peso. There are also gains for the dollar against emerging market currencies, typified here by the South African rand, where the dollar gained 0.27% back against the South African currency. Dollar index for its part marginally better, up by 0.21% over the last 24 hours to trade at 95.25 shortly before we recorded the video. Okay then, what's on the calendar? Events that may move the markets today. Pretty compact calendar, but still plenty of events and items of interest to pay attention to. First of all, note that we have another summit around Brexit. It's not clear that Theresa May will have anything new to say to the powers that be in Brussels. Nonetheless, negotiators are expected to gather for talks about how we can move forward from here. Then at 8:30 GMT in London, we shall hear the retail price index and CPI, consumer price index data for September. Half an hour later, we switch over to Europe for a release of consumer price index data out of the Eurozone for the month of September. And then there's a break until 12:30 GMT, and we cross over the Atlantic for housing starts and building permits for September out of the USA. At 16:10, we'll have the first of the day's central banker speeches, and this one from FOMC member Brainard. And then at 16:30, German Bundesbank President Jens Wiedmann will take a turn on the rostrum. He's speaking then. Staying with central banks at 1800, we will have the release of the FOMC minutes, the details of the last Fed meeting, who said what and voted how, and what their expectations are for the future path of interest rates. And then another significant break till 23:50, when we'll have balance of trade data out of Japan for the month of September, and at the same time we'll see the release of foreign bond and foreign investment in stocks for Japan for the week of October the 12th. Okay then, breaking news and comment that's caught my eye overnight. And first of all, US equities have rebounded strongly, helping to drag Asian stocks higher as a result. So a bit of a firmer footing for the equity markets this morning. Japanese PM Shinzo Abe has arrived in Paris for talks with President Macron as part of Mr. Abe's ongoing European tour. Meanwhile, Australia's leading indicator index has showed slowing growth was likely in the months ahead, according to its September reading. And US job openings hit a record high yesterday, with more than 7.1 million jobs recorded as being available in the country during the month of August. Okay then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? Fund managers who run some $646 billion have turned bearish on the outlook for global growth, says Bank of America Merrill Lynch in their monthly fund manager survey. In fact, the fund managers are more bearish on global growth than at any time since November 2008, according to the US Investment Bank. This is the chart that exemplifies that data. Merrill asked fund managers at this time, in which phase of the economic cycle would you say the global economy is? The yellow line is the number of fund managers who believe that it is in late cycle, and the blue line is the one that shows the number of fund managers that think the global growth scope is in mid-cycle. The blue line heading down, the yellow line heading up, so a much more bearish outlook than we've seen over recent years in the aspect of global growth. So that's something to consider. Just one view, of course, but a view that we should take seriously given the scale of the money that those people run. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about the suitability of leveraged products for you or the risks involved, then please do consult your Pepperstone account representative and do take a moment to read this risk warning thoroughly. Thank you for your time.